Hey guys, Stock Saturday and another very volatile week. Every week seems to be in the Trump universe. We've had a bit of downtime in software and sort of materials over the past week, all over the place. I'm down about 1.4%, so sort of in between, sort of more towards Nasdaq. S&P is actually up 0.12% for the week, but the Nasdaq, albeit up 2% today, is down 1.77% for the week. So I'm slightly better than the Nasdaq, obviously with a fairly high risk portfolio. That's what I should be benchmarking myself against, I suppose. A lot of people with sort of high risk portfolios benchmark themselves against the S&P, and then in a bull market sort of say I'm outperforming the S&P, and you sort of think, well, you've got mainly growth stocks, you should really be trying to outperform the Nasdaq. Obviously, then when things start taking a bad hit, then you say you're underperforming the S&P when actually the Nasdaq is doing pretty bad as well. We've seen some fairly volatile percentages here, though. Amazon in double figures, quite a few of big names in sort of fairly big drops, sort of after hours, after earnings. We'll come back to the portfolio. So one of my larger holdings, Hive Digital, if you include all the options and everything, they reported their January production. Obviously not earnings, it's just January, Bitcoin produced and things. They produced 297 Bitcoin. I was hoping for quite a bit more. I guess the weather sort of does take a fair hit, especially sort of up north in Canada, and I guess maybe South America as well gets hit, reasonably hard. But yeah, difficulty sort of dropped in January, and they did over 300 in December. So I was hoping for quite a bit more. Looks like we're getting a fairly steep drop in difficulty on Saturday. So yeah, hopefully the February numbers will be quite a bit better. Weather sort of improving as well. But yeah, 297, pretty good. Hash rate sort of averaging 22.2. They were sort of at 25, so shows why they've had to, or why Bitcoin is a bit low, because they've had to shut off a little bit of their hash rate at times. So yeah, fleet efficiency at 17.5, pretty good. And they are sort of making some small transactions, which they do quite a lot of. They bought 2,667 S21 XP miners to replace some of the old Buzz miners, and they should be installed this week. So quite good. Expected to raise hash rate, basically half an exahash, nothing too much, and bring efficiency down to 17 from 17.5. Also realizing some of their pledged Bitcoin as well. 480 Bitcoin, the 2025 amount that they pledged. This was quite a good way of borrowing money. Sort of pledge your Bitcoin and get money for it with the option to buy it back. So if Bitcoin price had have gone up quite a bit, they would have been able to buy this back cheaply. But yeah, part of the option is still there. And yeah, basically they're talking AI. They have a big target for this year. We'll have to see if they can get close to it. But yeah, hopefully January and February, February and March numbers start to look a little bit better, Bitcoin starts to pick up, then I think there's potential here. And then IREN, this isn't actually the January production. They don't do monthly production anymore, since they are sort of much more focused on AI than Bitcoin. They don't even really sort of report how much Bitcoin. They don't make a big deal of how much Bitcoin they've produced. Certainly, they just give revenue numbers and things. and the sort of highlights are much more geared towards AI. So a 3.6 billion GPU financing at an interest rate of below 6%, which is pretty good. A lot of other companies are paying quite a bit more than that, and targeting 140,000 GPU expansion, expected to deliver 3.4 billion annualized run rate revenue by calendar year 2026, end of the year. So that is quite a large amount of revenue. It's debatable what the profit margin is going to be on this, but we'll have to see. And buying a new site, a new 1.6 gigawatt data center campus in Oklahoma. So a completely new area. They haven't been sort of anywhere near there before, and haven't really heard of any other miners or companies really sort of going into Oklahoma. So fair enough. This is admittedly an early stage project. Grid studies complete and power scheduled to ramp from 2028, so that's quite a way away. They have their sort of main site, the Sweetwater site, which they're looking to energize partly this year and partly next year. So yeah, they're obviously talking pipeline and deals and yeah, what can come into this and how they can sort of finance building this out, because it's all unbelievably expensive, as we'll sort of come to in the Capex numbers. But yeah, this is sort of all what IREN is about now, and sort of partly financing this through Bitcoin mining, but obviously Bitcoin mining not super profitable at the moment. At least IREN do have some of the lowest cost miners, or lowest cost mining in the game. So yeah, financial results obviously look fairly terrible, with Bitcoin not doing well at all. Revenue decreased to 184 million from 240 last quarter, and net income of 155 million loss compared to 384 million gain. They don't exactly hold a lot of Bitcoin, I don't think, so it was a bit surprising to see this sort of flip tremendously. It's more the companies that hold a large hodl balance that usually have these big swings, but they have impairments and things. They're sort of removing Bitcoin ASICs and putting GPUs in some of their existing sites, moving more towards the AI side, which I'm kind of okay with if that reduces global hash rate, sort of helps the other miners, and if other public miners want to be doing this, then all the better. Keeps bringing down hash rate for people like Hive, so that's fine. And adjusted EBITDA 75 million. There's quite a lot of adjustments that go into that. Regular EBITDA 243 million loss, which more than net income. So yeah, it's obviously all looking horrendous this quarter, but they're talking about deals and all sorts. Balance sheet sort of still, looking a bit changeable, I suppose. All this growth doesn't come for free. They had the convertible notes issue, 964 million of convertible debt last quarter, not this quarter, last year. 3 months ago, is now up to $3.685 billion. So yeah, quite a large jump in convertible debt. Obviously, if share price goes up, then that's a bit of a ding on share price, because you would presume that those people will want to sell those shares, so it creates a bit of downwards sell pressure. But they see that as better than straight bank debt, less risk. So yeah, balance sheet sort of looking a little bit squiffy in the last quarter. And yeah, there's not a huge amount sort of else to talk about really here. It's all about sort of Bitcoin price helping to pay for some of this, and the AI side, and what deals they can get done for this enormous, great big 4.5 gigawatt power portfolio now. Just coming to one of my smaller positions, Sylvania Platinum, just because it's they've recently reported and it's a very, very simple breakdown. They sort of give this this quite handy dandy little sheet, basically showing platinum and palladium and rhodium, admittedly, have been doing quite well. So they give you, last quarter rather than this quarter last year, just to sort of show things are, ramping up consecutive quarters. So the total production was 0% change in the total 4E. This is sort of platinum, palladium, rhodium, and ruthenium, I believe, and then the sort of 6 includes a couple of the smaller ones. But yeah, so almost no change in production, which is fine, really. They're producing quite a bit more than they used to. And gross basket price up from $1,953 to $2,374. Believe this quarter should look a little better if prices sort of can recover, because price was pretty good in up to mid-January. So yeah, should be rather nice. Revenue increased 25%. On a total net basis. They have some adjustments and things from byproducts and that sort of thing. 21% net revenue increase. So yeah, not too bad. They've had costs increase even in just the last quarter, in the last 3 months. So yeah, operating costs up 10%, indirect operating costs up. So yeah, net profit, it is still leveraged to the price. So 29% increase in adjusted net profit, and capital expenditures actually down since 3 months ago. So that's quite good. They've been doing some buybacks, I believe, as well. So yeah, cash balance is down 14%, but yeah, I would imagine this will start ramping up at some point if prices stay where they are. So all good. As I say, costs sort of increasing. All-in sustaining cost up 15%. The all-in cost, including everything, which you don't see from many miners, only up 8%. So yeah, that's okay. Basket price up 22%. All-in cost up 8%. That's the way you want to see it. So what is everyone getting very, very unhappy about? It's these big Capex numbers. We've had basically all of Mag 7 report now, apart from Nvidia. And yeah, we've got this $600 billion Capex number for 2026 for the big players, basically. So you've had Alphabet report this week. Last year, 2025, they did $93 billion in Capex, and people said sort of that's quite a lot. We're sort of used to having a lot of buybacks and, being a software company largely, sort of capital light business. And then they came out for 2026 and said they plan to double it to $180 billion. I think analysts were sort of expecting it to increase 10-15%, and yeah, they've come up with 180 billion. You had Amazon this week, again, sort of 131 billion last year. I think they were expecting sort of 140s, 150s, and Amazon, not to be beaten by Google, came out with 200 billion in Capex for 2026, and similar numbers with Microsoft. They're sort of doing a little bit less than Alphabet and Amazon, but still a lot. And Meta, people still sort of unhappy about spending from Meta, but they look sort of slightly smaller compared to these, obviously. Oracle, strangely enough, has decreased quite significantly 61 billion in 2025, and they're forecasting 25. So yeah, it's still fair amount, but is down quite significantly from last year. So yeah, this means a hell of a lot of money going to Nvidia. They're sort of stating the who actually wins, sort of Nvidia, Broadcom, and Taiwan Semi from the semiconductor side. Obviously, there's other companies in there, ASML, Lam Research, and KLA, and all sorts of people like that. Applied Materials, one of mine. On the semiconductor side, and then you've got power and energy. They're noting sort of natural gas turbine people, oil potentially. I would think may do okay. The oil companies sort of do a lot of natural gas as well, and then you got uranium and all sorts really. But yeah, it's a hell of a lot of capex from these large companies. Obviously, these companies have a different return on investment on this capex. Amazon CEO Andy Jassy said as fast as they install this AI capacity, it's getting monetized. So they see it as everything that they can build is worth building, and they have their sort of custom in-house chips, the Trainium and Graviton chips, has crossed a 10 billion annual run rate revenue. So yeah, it's worth building. The other sort of companies are obviously saying all of this is worth building as well, and part of the reason I would say the main reason that these numbers are quite so staggeringly large is the tax incentive that has been put forward by the One Big Beautiful Bill from the Trump administration. Basically, if you sort of build all of this stuff, normally you would depreciate it over a number of years. Sort of big factories and things, you might sort of have over a 30-year period. You're saying the sort of useful life of this factory is 30 years or 40 years, and so you divide the total cost of that factory by 40, and that depreciation would go into your it'd be a knock on net income over 40 years. Trump is saying you can do 100% of the depreciation in 1 year in 2026. So the benefit of that is that it reduces your net profit down reduces your profit before tax down an enormous amount, because you have that depreciation line being very, very large, and means that you pay very little tax, or you may even get a tax refund from sort of losing money on paper, but not actually in cash terms. And then sort of going forward, this would mean that you don't have any depreciation on these factories and various sort of things that they're spending this capex on. And you would end up making a hell of a lot more money next year and going forward. So you end up paying, I would say, a lot more tax in the years going forward. But for this year, at least, most people are sort of short-term focused. This gives you a huge tax incentive this year. So they're all doing it. And the other knock-on effect of all this capex is the lack of buybacks, you would think. The sort of total percentage, quite like this chart, total percentage of operating cash flow that went into buybacks back in 2022 sort of peaked out at 46%. So this doesn't even include dividends as well, but obviously the biggest companies don't really do a huge amount of dividends anyway. But yeah, for S&P 5, this is total S&P 500 companies, 46%, and this sort of has been coming down gradually and quickly in various years. 2025 it was 21%, and it's forecast to be 15% as this capex is rocketing up in the red here. So 44% of operating cash flow going on capex this year, and only 15% going on buybacks. So basically that sort of constant bid for the market all year from companies buying back their own shares, which in turn affects the S&P 500, is not going to be there. So the flip side, you would think, is the Capex will increase GDP because this money sort of all goes into the real economy rather than just being sort of going into financial assets. So you have fewer buybacks, but in theory, a massively growing GDP. So you might get institutions and potentially retail, if they have money, sort of investing in these companies off the back of increased revenue numbers and things, albeit as I say, net profit might take a big hit because of this depreciation. You could even have people like Google. I haven't sort of looked into this in detail, but you would think potentially Google and Amazon and people could be making a net loss for 2026 on paper. As I say, this is depreciation and not actually a cash charge, but it's potentially going to be on paper a net loss, and you're going to see adjusted net income numbers and things from people like Google, which you don't normally see. It's just 30% net profit, regular as clockwork. So, yeah, interesting times going forward. Sort of potentially lack of a bid on these big stocks, but increased GDP. So, have to see how that plays out. So, economic numbers for the week. We did get quite a bit of interesting stuff. A lot of people have been focusing on the ISM manufacturing PMI and the sort of, I believe this is the S&P manufacturing PMI, or the sort of main US number. The ISM number sort of focuses on the US's sort of dealings with the rest of the world, and is sort of more a global number. But obviously I focus on these are sort of when it's above 50 expansion and below 50 is contraction, and the manufacturing number has been below 50 for a few years really, with a couple of sort of minor spikes above 50 and then back below it again. And yeah, it's gone to 52.6. So whether this is again just a one-time spike, or whether this is the start of this enormous capex boom sort of going into the manufacturing numbers, we'll have to see. But this is sort of kind of tied to the real economy and to somewhat crypto prices, which we'll have to see if that picks up. It would be very nice if this can sort of sustainably start going above 50 and maybe even towards 60. Yeah, we'll have to see. GDP now is still sitting at 4.2% for Q4. Obviously, Q4 is over. This was at 5.4%, so it's changing all the time. We saw some other sort of PMI numbers for EU and the UK, a little bit worse than expected, but still quite noticeably above 50, so that's quite good. ISM non-manufacturing PMI, the sort of bellwether for the US economy, being a services economy, 53.8, pretty solid, same as last month actually, although it was revised down in this report. And yeah, Bank of England didn't cut, albeit it was 5.4 unchanged as opposed to the expected 7.2. But yeah, and the EU didn't cut either. They don't give their voting numbers, but yeah, I don't think anybody was expecting them to cut. They're already at 2.15% on the main rate. US job numbers looking a little bit weak. 6.5 million job openings. So yeah, potentially Fed should be looking at that. And yeah, that was about it. So as I say, portfolio has taken quite a bit of a hit over sort of the last few weeks. Certainly crypto sort of very, very unhappy, and gold and silver sort of somewhat recovering and then have come down again. And yeah, gold sort of holding up a little bit better than silver, unsurprisingly. And had a admittedly on the week have had a bit of a gain in some of the semiconductors that will be affected by this, rapid increase in Capex. TSMC up 6% for the week. Samsung doing quite well. Applied Materials sort of up in the last day or so, but they did fall, so only up sort of less than 1%. AGCO, the sort of John Deere competitor, up 17% for the week. It's quite good. IREN, they didn't particularly like the earnings, and crypto is down, so it's down 21%. And yeah, some other sort of lots of reds, lots of greens, as you can see. Leave your thoughts in the comments if you've got any sort of specific thoughts on any of these. And on the options side, Equinox has barely moved, 0.57%. B2 sort of down ever so slightly. That was pretty much flat sort of a few hours ago, actually, because this is 10 o'clock at night. And Hive, admittedly, I have been sort of buying a little bit more, so it's affected the percentage a little bit, but it is down about 34%. The stock's down 10.8, so the options have obviously done quite a bit worse than that. But I still think there's potential there. We've got almost a year to go on these options. January the 17th next year. So yeah, with that ISM number ticking above 50 already, and potentially an enormous boom year going into US midterms, I think Hive can potentially do well. A little bit of an AI trade in there as well. So yeah, it's a gamble. Could sort of potentially pay off big, and sort of buying the low if it does start to go up means that I can potentially sell some of that a little bit sooner and sort of realize some profit. So we'll bring my average down. So yeah, there is it's gambling, but potentially means I can be a little bit less risk taking if it starts to go up. So yeah, a little bit strange to sort of get your head around. But yeah, the ETFs, not too much change there. Mid cap and small cap doing quite well. Obviously, Nasdaq is down. This is sort of the talk at the moment that small caps should do a little bit better because they're sort of adopting AI and not getting disrupted quite as much as the sort of big tech companies. So yeah, interesting. And Bitcoin down 15%, Ethereum down 25%. So quite a knock for the week. Still got quite a big cash pile. That is sort of about about 30 grand in sort of spendable cash, and then a load of that is for tax. But I leave it here because I don't know exactly how much the bill's going to be. So yeah, interesting times. Leave your thoughts in the comments below if you're a busy person at the moment, buying or selling, and like and subscribe. See you soon.